Hey everyone, Ben here and welcome to Motivation to Invest. Will Lemonade, the stock, be the next short squeeze? Well, in this video, you guys are going to find out. I'm going to dive into a deep dive valuation of Lemonade and then also whether this could be a possible short squeeze, because some really interesting things have been happening with this stock right now. So let's hop right into the share price and I'm going to show you guys exactly what's been happening, so no messing around. So as you can see, I first recommended this stock back on the channel back in early 2020. As you can see here, I did a video 10 months ago. Will this growth stock be the next Tesla? Lemonade stock analysis. Since then, so the company IPO'd, we've got here July 2020, around $70 per share. Since then, the stock went on a rampage and it was up 136%, so tremendous gains. However, there has been a correction down now. So it corrected down by 57% along with many other growth stocks in the industry, but it also got hit with a short seller report. However, something very interesting has been happening with the stock right now. So the stock's actually rebounded by 49%. Wait for it, guys, over the past 3 to 4 weeks. So 49% gains, 3 to 4 weeks, that's pretty good. So my personal position is up around 60-70% at the moment in Lemonade stock. So full disclosure, I do have Lemonade stock at the time of recording this video. So what I'm going to dive into is exactly what this company is, whether this could be a possible short squeeze, and my deep dive valuation and buy point for this stock. So before we hop into, if you do appreciate all the research which has gone into this video, feel free to give it an early thumbs up. That helps out tremendously with the channel. And if you do like these investing tips and exclusive stock market picks, feel free to join the investing family by hitting that subscribe button, turning that notification bell on. And remember, guys, if you do want to access in real time exactly which stocks I'm buying, selling, my entire investment portfolio, and maybe even step up your investing game by signing up for our ultimate investing strategy course, you can find out all that and more. First link in the description below. With that being said, let's dive in. So kicking things off, guys, what does Lemonade actually do? Well, the company is an insurance technology company which focuses on renters insurance targeted at millennials. However, the company is now expanding into pet insurance, homeowners insurance, and even car insurance. Now, this company plans to disrupt the entire insurance industry, which is dominated by many large incumbents, which generate over $100 billion each in terms of revenues. We've got companies like Allianz, State Farm, and many, many more. It plans to actually... Now, I'm going to play you a brief clip of the CEO and founder, Daniel Schreiber, to basically give you guys a bit of a flavor of what this company is about.
Distrust insurance companies, not because they think they don't have the wherewithal to pay their claims, but they think that they don't have the will to pay their claims. So we really try to change the fundamentals of the business model so that we never make money by denying claims, that leftover money goes to charity, and to try and restructure the trust element, which is one of those things that really plagues the industry. Co-founder are 20-year veterans of the tech sector and newcomers to insurance. So we built everything on AI and bots so that at Lemonade, you buy insurance by chatting to a bot. You buy insurance in 90 seconds. That's the median time to buy insurance. So during a commercial break, you could start the process. You'll have it complete before the programming is returned to normal. And we also pay claims the same way. So you have a bot that will talk to you, and about a third of our claims are paid instantaneously in as little as 3 seconds. So really pretty transformative. That slashes costs, and the data that it generates is just incredibly powerful. And the core of insurance is about using data to price and underwrite risk, which we think these new data structures and being built as a tech company rather than just a traditional insurance company allows us to transform the plumbing of the entire sector.
So as you can see, guys, that's really, really interesting stuff. You can see the CEO and founder, Daniel Schreiber. He's a very charismatic guy, great marketing guy, great sales guy, and he's very eloquent, very well spoken, and that all helps to improve Lemonade's brand. Now, the company also aims to grow with the customer, which is really quite a unique way of analyzing their business model. So they aim to obviously get their foot in the door with customers with things like pet insurance or renters insurance, where the premiums are really low. As the customer gets older, they may buy a house and then they can buy homeowners insurance, which has higher premiums from Lemonade also. And then when they get a car, they can also buy car insurance. So there's plenty of upsells with this strategy of growing with the customer. Now, this is a high growth company, so their in-force premiums at the moment, so the amount of premiums, insurance premiums this company has collected is up 89% year over year. Now, usually I say growth stock as one growing around 20%. 89% incredible growth. The premium per customer is also up 25% year over year, $229 per customer. And they have over 1 million customers, which is up 50% year over year. Now, the other thing I do like about the company is the experienced management with a strong vision. So I mentioned Daniel Schreiber, great sales, great marketing guy. But the other co-founder of the company is a guy named Shai. And according to his LinkedIn, he was the founder of Fiverr. So Fiverr, the incredible gig economy website where you can actually outsource work all across the world. So it's clear we have two experienced founders, both based in Israel, which is set to be the new Silicon Valley. However, there was a major risk, which I did spot with Lemonade. So there's been a hell of a lot of insider selling. So generally I like to invest in companies where they have skin in the game, they have a large insider holding in the company. And for one of their founders, Shai, he has 5.51% of the company, which equals around $351 million worth of shares in the company, which is great to see. And he hasn't been doing any selling. However, Daniel Schreiber, the founder, he has just 0.081% of shares, which is only equal to $5 million. Now, that's not really a lot considering you're the founder and CEO of a major company. Hopping in right here, there's been a hell of a lot of selling. So Daniel Schreiber sold $47 million worth of shares, 19th of January 2021. Well, I must say, first of all, perfect timing.
This Robinhood app is just really bringing me lots of fun and joy and give me a nice little hobby during this pandemic.
But that's probably one thing which did drive the share price down even more. So he sold at $159 per share. I've given this company extremely optimistic growth projections. I've said 70% next year, 60% the next 2 to 5 years. I'm expecting their margins to grow to 20%. So the company's currently unprofitable at the moment, burning a lot of cash on sales and marketing to try and scale the company and scale its business massively. And I'm expecting all the metrics to move in the right direction in the next few years. So with all that being said, the valuation I have for the company is around $69 per share. Now the stock's currently trading at $100 per share. So it is looking overvalued right now. Because if I dive in here, the short squeeze opportunity. So the short percentage of the float for Lemonade stock is 29%. And there's been quite a bit of chatter around of whether this could be a possible short squeeze candidate because this is a majorly shorted stock. Now that could mean the stock's overvalued, but it also could offer an opportunity for a potential short squeeze. For those who don't know what a short squeeze is, so a short is where you basically bet that a stock will fall and you make money from doing that bet, which a lot of hedge funds have done on stocks like GameStop and AMC. However, a short squeeze is when the stock starts to rise as people have the short position on, and they have to cover that short position by buying back in the stock, which produces even more momentum and the stock goes to the moon. So overall, I do think this is a fantastic company. It's just the insider selling, which is a major red flag for me. And the second risk I do see of this company is the company also has major competition, not just from the incumbents in the space, such as Allianz, which have over 100 million customers, but from the insurance tech companies. There's many different ones popping up right now. So a major competitor which I actually saw is a company called Root Insurance, and this company is actually pretty special. So Root Insurance focuses on auto insurance. So they make the majority of their revenues from auto insurance. It's also founder-led, so great news. 28% of insiders own shares, which is great. Their in-force premium is $100 million more than Lemonade. Their premium per policy is higher because they're focusing purely on car insurance, which they get high premium with an average around $939 per policy, whereas renters insurance, pet insurance, it's quite low at $239 per policy. Their revenue is also much, much greater than Lemonade. So their revenue is $347 million. Lemonade's revenue is $91 million. And this is the crazy thing with this company. So the optimistic growth projections on Lemonade are around 70%. This company is only expected to grow around 20 to 30%, which is why this company also trades at a much lower valuation. So the price of sales for this Root Insurance company is 8. Lemonade's price of sales is 69. So what's my fair value and buy point for Root Insurance? Well, surprisingly, this stock is actually undervalued. So I've given this company really sort of conservative projections, 30% growth rate for next year, 30% for the next 2 to 5 years. And the fair value I get for this stock is around $12 per share. It's currently trading at $10 per share. So it's currently looking like it's undervalued right now. So definitely that could be a potential buying opportunity. So Lemonade is an extremely interesting company. What do you guys think? Do you guys think Lemonade stock is overvalued, or do you think this will be the Tesla of the insurance industry? And do you think a short squeeze is coming very soon? I'd love to hear your thoughts, guys, so please do comment those below. If you did find value in this video, feel free to give it a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, feel free to join the investing family by hitting that subscribe button, turning that notification bell on. And remember, guys, if you do want to access in real time exactly which stocks I'm buying, selling, and access my entire portfolio, and join a thriving community of some of the finest investors on the internet, and if you want to step up your investing game and join our ultimate investing strategy course, details for all that and more can be found first link in the description below. And I'll also leave a special coupon code down there where you guys can get a very special discount. Now that is only for the next 24 to 48 hours only. So if you do want to sign up and take your investing game to that next level to become financially free, then now is the time to do it. With that being said, thank you guys so much for watching. I hope you all have an incredible day, and I'll see you in my next video. Invest safe.